Larry, Greg, glad you guys could join us today. We're pumped to hear your most up-to-date macro thoughts and all of that, but first, we got a couple of housekeeping things to get in order here. I'm going to start with you, Greg. We had a story on the show recently, maybe in the last few weeks. You went skiing out with Seb Bunny, and he told us about this tragedy where you guys ended up on, your skis over a cliff. Tell us your version of that story. We want to make sure that we keep everybody on pace here and don't let Seb talk any shit behind your back.
So this was, last ski season. So to be clear, I just came back from a trip and skied with Seb at Whistler, Blackcomb to be exact, this year. And we joked about it on the chairlift, and I told him, Seb, I'm coming back at you. I'm on with the boys. So I'm wearing my Whistler Blackcomb ski hat. This is the logo in honor of surviving another ski trip with Seb Bunny. All right. So what happened a year ago, real quick, because you guys mentioned it, that and Seb said, yeah, that fat Foss, he's not very flexible, and we got into a thing, and I was skiing with another guy. So let me be clear what happened. So we get cliffed out, which means there's cliffs on this side and this side, and we skied in here. Now, those two guys I was skiing with are able to flip their skis 180 degrees and go quickly out this way. I am 60 years old, twice as old as Seb, okay? Seb, you young little donkey, okay? I'm twice as old as you, and I'm not flexible. My brother has 2 artificial hips already, or 2 hip operations, so I can't flip my skis like this, okay? I just can't. I can't even flip my hands like this, let alone my hips. So I'm cliffed out. If I ski this way, I go over about either side, you're going over a substantial cliff. It's, you'd fall at least 100. You'd tumble 100 feet, but you'd fall 50 feet and then tumble another 50 yards or whatever. The point is, I was scared. And I ended up doing a dumb thing, which is I took my skis off to be able to flip my skis and ski out. But then you lose traction. So I started sliding a little bit more towards the edge. And when I finally came down, because my buddies were down, there was Seb and Derek Schumann, my good friend from Whistler as well, who were way down here watching me struggle on the cliff. And I finally got my skis turned, and I came and I skied around. And I just wanted to give Seb a little brotherly love. Like, what did you do? Get me into that little situation. I was scared. I'm unflexible. Yes, I'm happy to be alive. But I'm not a rookie. Like, this was not a rookie mistake. This was the mistake was skiing in the West Bowl of Whistler with Seb and knowing that, he can turn on a dime, and Fat Foss is not quite as flexible as he should be. So it was a blast. Seb is a great skier. We have a lot of fun skiing together. We just came back. I think you guys saw some Twitter photos.
Yeah, we did.
We had like one day, the day Seb and I were skiing, we had 20 centimeters, which is like 8 inches of fresh, light pow. And it was just a lot of fun. And we were doing big carving turns and everything. But yeah, we giggled a little bit because he goes, Foss, I swear I wasn't trying to make you sound like, a fat old man. And I said, well, that's fine, Seb, because I am a fat old man, but I need to give you some, some pushback. So that's my pushback, boys. I could not change my skis 180 degrees. My hips just didn't work that way. And I was stuck up there like a crying little, We're
glad you made it out, man. That's some scary shit. Like, those cliffs are no joke. In pictures, they look, kind of tame. But when you're there looking down on that shit, it is, it's a different thing altogether.
You need to stop skiing with psychopaths like Seb and come out with some Midwest pansies like the two of us, Greg.
No, I think Seb is a fantastic skier who certainly, lives on the edge, but didn't do this on purpose. And everyone would go, yeah, look, I'm really sorry. This was not supposed to happen. The mountain changes quickly, right? Like there's the snow can melt under sun or shifting snow conditions, and a cliff that wasn't there 2 weeks ago in a bowl is now there just because. So that's, I think, what happened.
Yeah.
And anyway, over to Larry.
Yeah, Larry, how are you? What's the good word? What workout did you do today?
I have one word for you, Foss. We're going to drag your ass into CrossFit. We're going to get you so that you can do a ski flip just like like falling off a log, man. It's going to be a piece of cake. Basically, the next time we're together at one of these conferences, we're doing a CrossFit workout together. You can do it, man. I mean, Foss sells himself.
I listen to Brandon.
Foss
right?
sells himself short. I mean, you can see underneath all of that, he's a really good athlete. I mean, he's got a son who plays pro hockey.
Yeah.
So, I mean, there's some good genetics and there's some good athleticism there. And I've been with him in a lot of places, including Madeira. Watched him dive off of incredibly high piers and so on and so forth. And he's got balls. So Foss will be fine. You just need to tune it up a little bit, man. You basically gotta start doing a little more on a regular basis. And a couple months.
No more 12-ounce curls.
Couple months of CrossFit, and you'll be burying Seb. Yeah. I don't know how good a skier Seb is, but you'll be able to keep up with him, I'm sure. So we're gonna get you there, Foss.
I keep up with him, Larry. Thanks. I keep up with him. He's young and fast, and we have a good time. But you're right. A little squishy at the midsection. If I lost, if I got back to my fighting weight, it would be a lot better.
You're still fitter than most.
We'll aspire
you're still
to your
fitter
CrossFit.
than most 60-year-olds by a large measure, though. I mean, I look at my peers who are all 65. I mean, it's
You're too kind.
It's something to behold, right?
True that. Larry, what was the workout today? Did you get in the gym today?
What was the WOD today? Today's WOD wasn't too bad. They kind of so we're in this thing called the CrossFit Open, which is kind of cool. I don't know how much you guys know about CrossFit. I'll just briefly talk about it. Every year, every CrossFit box in the world does the exact same workout on Friday. It used to be, I've been doing this for years, it used to be 5 Fridays in a row. Now it's 3 Fridays in a row. And what's really fun about that is that you can literally compare yourself to every CrossFit athlete in the world. And so you can see, what Matt Fraser's doing. And of course, that's not what you're doing, but you can also, and they break it down by age group and category. So I can compare myself to all the 65-year-olds. Today's workout, we did heavy deadlifts, sets of 2. I built up to 275, kind of started at 135. And then we did it was a deadlift workout, which was 8 deadlifts, 8 burpees over the bar, 8 handstand push-ups. So as you can imagine, I don't do handstand push-ups. That's beyond my shoulders pay grade. So I did regular push-ups, then 8 more burpees, and then we did that for 3 rounds. And it took as fast as you can, and that took about 11 minutes, something like that.
Damn, inspirational.
Yeah.
Inspirational.
Burpees will wear you down. Burpees are better for short people. I'm 6'3",
definitely,
and that's a lot of body to fold and unfold, which is really kind of what a burpee is all about. So,
seriously though, being mobile and flexible and having a good quality of life at your age, it's habits over years, man. And a lot of people just wake up and wonder, well, why do I feel this way? Why can't I pick my grandkids up off the floor? Yeah, it's years of irresponsibility to your body, and it is cool to hear you.
Here briefly, because it's just a public service announcement. Anyone who's 50 or older who doesn't have an exercise program, go out and buy Younger Next Year by Crowley. And it's a great book because it's about a guy who was a really high-powered attorney, Harvard Law School guy in Manhattan. He went to his doctor. He was a heavy drinker, heavy smoker, overweight, and everything else. And his doctor said, dude, you're going to die. And he was like in his mid-50s. He said, you're going to die in the next 10 years if you don't clean up your act. And so he talks about how he cleaned up his act and why he did it. And and he's changed his life. Now he's 80 and he's still going strong. And the big paradigm shift, and I talked about this earlier on a different call today, was, and I think it's an important paradigm shift. Guys, generally speaking, from 20 on, what do you think about? You think about, making money and taking care of your family and kind of providing for people. You don't really think about yourself. I mean, you're thinking about yourself, but obviously you're thinking about making money. And that's your number one job. You get up in the morning, what am I going to do today to make money and be successful? And the point of this book, and it's a great point, is that when you turn 50, you need to kind of change your mindset to my number one priority, more important than making money or than work. And hopefully by the time you're 50, you've made some money. My number one priority is what am I going to do physically to make myself stronger and more flexible and keep myself going. And so that kind of becomes your job. Your job is how am I going to stay fit? And then once you're fit, then you can go do all the work and all the other shit you want to do as well. But when you change your mindset so that your fitness becomes a higher priority than making money, and I get it. I mean, look, in my 20s and 30s, I didn't work out much either because I was working all the time. But by the time you're 50, you generally, hopefully, have some control over your schedule. And you just got to put an hour and a half in every day to make yourself fit, or else as we all know, I mean, I know I can speak from my peer group. You go downhill really fast after 50, and I know 60-year-olds that look like they're 80, and I know 80-year-olds that could kick all of our ass in terms of athletic performance. So, and that's all just a matter of it's not a matter of even being great at any one thing. The most important thing is actually showing up every day. That 5 to 7 days a week doing something, because it's kind of progressive. And if you're only getting 1% better a week, you're still, at the end of the year, you're 50% better, right? I mean, it's just, it's like a block you got to just keep chipping away at. So that's kind of how I look at it. And I'm really not that good at it, but I'm very persistent at it. And I think that's the important part,
Man, dynamite nuggets, Larry, especially.
I was just going to say quick, it's also one of those things where the sooner you do start, it's like investing. Like you start at 20, you can snowball that into a lot more money by the time you're 50. And the working out and that discipline is the same thing. Like you start at 20, you're going to be way better off at 50 than if you start at 50.
Yeah, no, my first 5 years were pretty rough because I was in pretty shitty shape. And in your 40s and 50s, you can get it back. In your 30s, you can get it back real quick. By the time you get, the further on you get, the harder it is to get it back, right? I mean, you can get to the point where you've lost stuff that you almost can't recover. But I mean, they've shown strength and improvements in people who are 70, 80, 90. So it's never too late to start. You might as well start wherever you are. But I think 50 is kind of the break point. That's where I really noticed my body kind of saying to me, "Hey, dude, this isn't working." I mean, and I got angry enough about it that I started looking for a solution. And I think obviously I'm a big proponent of CrossFit. I just think it's a very efficient, well-designed, group-oriented activity that, while not easy, will actually guarantee and deliver results. And that's what most people want. I mean, a lot of people just wander into the gym, they wander around for an hour, they don't do much, and they wonder why they don't have any result. You gotta work hard to have results, right? Because you don't have to kill yourself. You just have to work consistently, at a reasonable pace.
Yeah, and you have to find a program
that's right.
or a habit that's actually sustainable. You see so many people get on these binges with eating and exercising, and you can immediately size up if you're one of their peers or you're close to them. This is not going to work. This is going to end in 3 months. So that's the benefit of like the community aspect you're talking about there is it's something you can plug into, have some accountability, and hopefully sustain.
The community is key, and you also got to mix it up. The book talks about that. You got to do stuff you enjoy. If you enjoy skiing, ski. If you enjoy biking, bike. Enjoy tennis, if you enjoy swimming, whatever. I do all of those things. I mean, I swam the other day. I just bought a couple of new bikes because I want to do more biking. And so it's whatever it is that floats your boat, do it, because it is a use it or lose it thing. I mean, to the younger guys listening, I would say, in your 30s, don't sweat it. You got time to recover, but don't let it go too long.
Yeah. Yep. As we transition into the meat and potatoes here, and I guess before we get lost in the in-depth macro tangents, which don't worry, folks, we're going to do today, I say we start out with our original intention of having you two here together, and that's you guys speaking to your generation. You two are really thoughtful in your economic concerns for the younger generations, for our generation. Foss, you're constantly hashtagging for the kids. But we, in our 30s, we have equal concern, gentlemen, for your generation, our parents' generation. You could say hashtag for the parents. And I know the four of us would agree that the current economic landscape is precarious, to say the least. And I think it can be argued, guys, that those that are at or approaching the end of their earning years may have the toughest road ahead. They have less room to pivot. Their fuck-ups are going to be accentuated more. So I want to spend some time, if you guys are up for it, unpacking why this asset, Bitcoin, is potentially so important for those at or nearing retirement age. And if so, before I hand it to you, let's try to do so in a manner that's somewhat approachable for someone that doesn't speak fluent financialese. Maybe Larry, we'll start with you. If you have any thoughts, and then we'll kind of go from there.
We'd start with Foss. He's better at this than I am, but
we can reverse it. We can do the old flip flop here. Well, Greg, you want to?
I'll just generally say that the big picture. I'll keep it quick, and Greg will get a lot of the other points. But sadly, the system that we've set up is broken, and it's fiat. The money we all have is programmed to debase, and And that's the saddest thing I think about the system. I saw it happen to my dad, is that you can't really retire and know you're secure. The reason for that is that you can retire with a certain number and you can think to yourself, okay, that's a pretty big number. I know my dad's was modestly good when he retired. By the time he passed, it had really whittled away because of all the inflation and it had eaten away at it. And that's Greg's point, that fiat's programmed to debase. And so I would totally agree with what you say, Dan, which is that people who are older have less time to recover. They have a certain amount of savings, and yeah, it's nice that you have those savings. But what if gasoline's $50 a gallon and your food bill is 4 or 5x where it is today? You can go from what's a nice middle class existence to, really being kind of living on the edge. And sadly, I think that's going to happen to a lot of older people who aren't, don't have their eyes open to what part of the cycle we're in. And we'll get into the cycle later, but we're in a very bad part of the cycle for people who are late in their careers. I mean, 30-year-olds, it's like the exercise. 30-year-olds can recover. You can get another job, you can make more money, you got a lot of energy. When you're 70 or 75, I mean, do you really want to be a greeter at Walmart? I mean, I know I don't, not to put those guys down. They're nice people, they're great people, and I honor them working. But the point is that, you don't want to outlive your money. And in a fiat system, we're literally all at risk of outliving our money because the money is broken. So that's my quick view of it.
Yeah, to chime in here real quick before you go, Greg, I was just going to say, I think for us with what we do at work, guys, this is maybe more in front of us because our job is very multi-generational. Like being a career firefighter paramedic, you've got 22-year-olds that don't know their hand from their ass next to 55-year-olds who have kids in college. So we work with a lot of people that are at the sunset of their career that we respect and love. And so it's beyond just our parents and our families. We're next to these gentlemen and ladies, every day at work who are trying to navigate this next step. A lot of workplaces aren't very multi-generational. Many generations are completely insulated from others aside from kin. So for us, it's a deep passion of ours to provide some answers or at least some risk hedges for people that you look at a 55-year-old firefighter who's going to be dependent on his nest egg and some form of defined benefit plan. That person is probably going to live, Lord willing, for 30 years. That is a lot of time to navigate a super precarious environment.
Correct.
Yeah. I want to insert just a quick story here. I went to the dentist today, right? Dental hygienist is probably about 60 years old is my guess. She's cleaning my teeth. Oh, yeah. She was super hot. She's cleaning my teeth. And she's talking to me as they do, she's asking me questions, talking to me. And she was incessantly talking to a degree. I was like, I don't know what she expects here. I have all this stuff in my mouth. But anyway, she's telling me all about herself. And she's like, and I thought she was joking. She was telling me how her plan for retirement is to win the lottery. And I gave it like a chuckle and she was dead serious. She's like, I need probably about $2 million. That'll do it. And I'll be good other than Social Security. And I'm sitting there thinking to myself, this lady is in serious trouble. She has her plan for retirement is the lottery. That is,
yeah. I mean, that's the predicament.
You've got a serious problem, and you don't even understand fully how, you're going to be doing this till you're 75 or 80.
Yeah, I mean, you can't make money appear out of thin air. So if you're backed up against the ropes and you've got no punches to throw, you're fucked. And that's why it's. Regardless of what age you're at, back to the fitness analogy, I don't care what phase of this you're at, you got to start getting your shit together, and hopefully we'll explore some of maybe how this thing, even a small hedge position in this thing, can give you something to throw at the opponent in front of you. Greg, what's your thoughts here? We're going to take a quick break here to remind you folks to get your Bitcoin 2023 tickets. The Bitcoin conference hosted by Bitcoin Magazine is going down once again in Miami Beach, May 18th to the 20th, 2023. Josh and myself, Dan, will be there, and if you're dead serious about Bitcoin or interested in learning more, you should be there too. Join the two of us for the world's largest gathering of Bitcoiners as we celebrate yet another year of progress towards hyper-Bitcoinization. It's gonna be a signal-packed party with a smorgasbord of outstanding Bitcoin education and access, and you can get 10% off tickets with code BCB23. That's BCB23 for 10% off. Ticket prices will go up significantly and incrementally from now until the conference. So get on it, folks.
Well, I think everyone's made some great points. I like the fact that you brought up, Dan, you brought up the defined benefit. Now, lots of pension plans are actually defined contribution now, right? That's the difference between having a defined benefit, you'll retire with this much payout, versus most pension plans now have moved to defined contribution, which means they define how much you contribute to your pension plan and match it, but they don't guarantee you a payout because that's risky for a pension plan. Many can't attain it because of the different hurdle rates. But what it comes down to is your defined contribution means you're sometimes making the investment choices yourself to set a retirement. So I want to mention, and Larry very kindly said, I'm no better at it than Larry. I just come at it from a bond perspective, which unfortunately, in my opinion, is one of the great misunderstood assets and mispriced assets. But too many retirees are concentrating on bonds. And that's fine when interest rates have gone for 40 years in one direction, which is from the top left down to the bottom right. Interest rates, which means bond prices have gone the other way, and your returns have been very attractive. In 40 years ago, you bought bonds with a 20% yield. I mean, that's true. Now, these bonds yield in the 10-year under 4%, the U.S. 10-year Treasury. So it's a markedly different environment for the older approaching retirement person. Here's one of the investing guidelines that I think is going the way of the horse and buggy, where they say take your age, and that's how much exposure in a balanced portfolio you should have to fixed income or bonds, right? If you're 70 years old, you should have 70% bonds, 30% equities. Well, that is a absolute formula for disaster, in my opinion, especially since bonds now have asymmetric downside in return. And as you guys correctly point out, it's a fiat contract that debases. Like, you have a certain amount in there that's supposed to keep account of inflation or compensate you for inflation, but doesn't compensate you for fiat debasement. And that is the problem. So bonds are part of the fiat Ponzi. And I would just say this, given this show is going to talk about Bitcoin, everybody, regardless of age, everybody needs a portion of their portfolio allocated to Bitcoin. The wrong answer is 0. The right answer depends on your age. It depends on your risk tolerance. It depends on your financial savvy. But I'm going to summarize this with a positive and shout out to those people still working at Walmart. Not maybe because they need the money, Lar, but because they still like working. Because retirement isn't that fun, you guys. I retired when I was 52, okay? Partly because I couldn't do it anymore, meaning, the financial markets had beaten the shit out of me for 30 years. And partly because I had built up an amount of savings that I felt comfortable with. But then you'd sit around and you get soft. Your brain goes soft. Your brain is your most important muscle. You got to exercise it. You got to keep being involved. So maybe the positive thing is here, people, we have an expression in Canada called Freedom 55. I'm not sure if you guys have that down in the USA. Freedom 55 was like, you turn 55 and you can retire. Damn, that's like, I know you guys aren't going to retire. You might not be firefighters because you might have a mandatory retirement age, but I'd be very surprised if you guys are sitting around screwing the pooch for the rest of your 30 years. You guys are going to be doing something productive and trying to, contribute to society. So maybe that's the positive thing. One thing that I do enjoy seeing are senior citizens who I actually don't think have to work, but want to work to contribute. And proof of work is the world. So long-winded answer, exercise your mind. It is the most important muscle in your body. Exercise your mind. Continue doing stuff that you want to do. Learn about Bitcoin because it is going to change the world, and get an allocation to Bitcoin for your kids. Whether it's for you or not, I don't really give a shit. because you have already taken so much away from the future of our children. You actually deserve, or you have to give something back, you fat, old, lazy boomers like me. Not going to call anyone else, but I'm the fat, old, lazy boomer that has stolen from the future of our children because no one shouted out the fiat Ponzi.
Well,
so I'm shouting out the fiat Ponzi. We have to change this world.
I mean, I don't think I have that attitude towards boomers, only because, primarily because I recognize that if I was a boomer, I would have done the same thing. Like, you're just happening to be the cohort of people that were lucky enough to live through the largesse of the last 30, 40 years. And that's just luck of the draw. Like, there's no animosity from my perspective towards anyone in that age generation. Like, it just is what it is. You know what I mean? One thing I wanted to ask you both.
You're too kind, Josh. I hate to interrupt, but you're too kind.
Are the same. You know, there's boomers.
I agreed.
And then there are boomers like Charlie Munger.
He's don't worry. We're gonna talk about him. Don't worry.
How long it took.
Right? I was thinking about bringing him up off the bat, but I was like, you know what? It's too chill right now. We got to get him riled up more before we bring up Munger.
Yeah.
So the two of you, I'm curious.
But can I just jump in, Josh? Yeah, let me just jump in to finish the thought, because there are givers and takers in this world, right? And I often say, there's probably in the world, and I'm an optimist, I'd say there's 60% givers and 40% takers, but it's probably, that can flip either way. The good thing about the Bitcoin community is we're 85% givers and 15% takers, is just my own, approximation. And then on Wall Street and Bay Street in Canada, 99% takers and 1% givers. Okay. So perhaps the guy I'm calling out most are the fuck-ups that work on Wall Street like I did, that know that they are takers at the expense of most everybody else in the world, and they don't give a flying how are you, because that's what Wall Street is. Why do you think most criminals go and work on Wall Street? Why? Because it's the easiest place to steal from someone and not break the law. Okay, that is exactly that's the generation I'm talking to, Josh, not your solid citizens who are paramedics and firefighters and first responders. I'm talking to the lazy fucking Ivy League cucks, okay, who go to work on Wall Street and get granted and think that they are somehow, they have entitlements to this type of lifestyle. No, that's who I'm calling out, and I think Larry would agree with that as well.
We're naming this episode Ivy League Cucks, by the way.
I call them the fiat masters. I mean, and they're easy to see, and they're not even always that smart, but they've benefited enormously from a fiat system, and they defend it, and they know that that's why and how they've gotten rich beyond all measure, and it's absurd. It's absolutely absurd. And, thank God for Bitcoin, and thank God, that sound money is going to wipe all that stuff clean in this fourth turning. That's the good news.
And to be clear, Larry's a Harvard boy, and I went to Cornell only for 2 years, but I'm a Canadian that went to Cornell. So I'm Ivy League from a Canadian perspective, real Ivy League, but that's the truth. A lot of these people come through the system and are entitled, and by being entitled, they are robbing from future generations. That is the absolute fact. That's the mathematics. So Larry and I call them out, and we're allowed to, because we live that exact privilege.
That's exactly right. We saw it, and look, I went to school with all these guys, and I know who they are and what they are and what they've done, and they're not dumb. They know. They completely know, and they don't like people like Greg and I, because we know as well. And look, to me, it's all about legacy at this stage. I want to be known as the guy who was fighting for what was right. And it's very clear to me that sound money is right, and that unsound money has killed millions, literally, and impoverished millions, and, hollowed out the middle class of the United States. It's just, the list just goes on and on. You can get me real riled up if you guys start pushing the right button.
That's the intention,
we will.
Larry.
We will. What I want to ask you, though, is when we're talking about, let's segregate them, the good boomers, the ones that aren't on Wall Street, the ones who we care about, our parents, guys we work with. When you're trying to help them understand why they should have some allocation to Bitcoin, do you guys have a go-to anecdote or a way that you can help them understand this? Because a lot of people in that age group just simply haven't grown up in the digital age where this makes a lot of sense to them. Do you have certain ways that you explain this that helps them and makes sense to them?
But before you guys go, it's immediately written off by your generation. I'm going to give you an example from the firehouse. We had this hilarious thing go down last week where somebody, and we're kind of, a lot of the millennials take the shortcut of just even though the older guys now that are retiring 55, or I think not even technically in the boomer generation, it's boomers and kind of millennials, right? And we had somebody started a chart that said things boomers do, and things started going up on the whiteboard. And then the boomers started things millennials do, and it was
hilarious.
It was epic. I have a picture of it. It was
we got to post that picture, Dan. It is fucking epic.
Yeah.
But one of the things that the boomers put up, and they had some scathing, hilarious shit about our generation, but immediately think Bitcoin is their answer to retirement. I think it was something like that. Obviously that's
exactly
directed heavily at Josh and I and everybody that's kind of on the blue collar Bitcoin bandwagon. My point is, because of all of kind of the millennial and below fugazi getting distracted in all these different areas, which there's truth to, lot of distraction and hollow, vapid things that our generation gets attached to and then moves on from. Bitcoin itself is often immediately written off. Like your generation commonly doesn't even get to sentence number 2 when this word comes out, even still today in 2023. So I guess just back to Josh's question, what do you use to break through that wall that's often built up right away?
Greg, you go first.
Thank you. Thanks, Larry. Okay, guys, it's this simple. I love firefighters. And that boomer firefighter that said that's intellectual laziness. So I'm calling you out, you intellectually lazy boomer firefighter. But when you have heart problems, do you try and do open heart surgery on yourself, or do you go to a professional? Obviously, you go to a professional heart surgeon. Well, Larry and I have both been in the risk management business our entire lives, okay? 30 plus years, each of us. So we might not be the smartest or the sharpest tool in the shed, but we have experience in identifying opportunities. So think of me as a heart surgeon, but I'm a financial engineer or a financial risk manager. And you can take this for what it's worth. Very simply, I believe Bitcoin to be the most incredible asymmetric investment opportunity I have ever seen. Which is to say, I have never seen a risk-reward opportunity better than Bitcoin. You can own 2% of your entire net worth in Bitcoin, and that can be a life-changing decision. If you lose that 2%, I'm pretty sure it shouldn't change your life. But if that 2% turns into something that I believe to be the best, most likely outcome I have ever seen in 35 years of managing risk, it is life-changing. And go to your whiteboard, you stupid boomer fuck, and erase that, because it is true. And if you don't understand what I just said, you're too fucking stupid. And why don't you just open heart surgery yourself and figure out why you don't do open heart surgery on yourself, okay? Listen to people like Larry, who has been a professional risk manager his entire life and sees what the opportunity is.
Okay.
XOX.
The title's going to be Boomers Buy Bitcoin or Kill Themselves. All right, got it.
No, I completely agree with Greg. This is the most asymmetric investment opportunity I've seen in 45 years of investing, without a doubt. And to address what you mentioned, though, Dan and Josh, I mean, to be fair to these old stupid fuck boomers who haven't done the work, there's been a lot of noise.
Yes.
And there are a lot of annoying Bitcoiners. Mm-hmm. And the natural human tendency is to say, is that with age comes wisdom, and so you would think, and by the way, all crypto is fraudulent. Okay, I mean FTX is fraudulent. I mean one of the things I'm encountering a lot, trying to orange pill people, is well, it's crypto, it's like FTX, it's going to be the same kind of story. So, and it's not, and so look, it is a technology. It is an important technological development. I think it's one of the most important technological developments of the last 100 years. We created a system which provides immutable digital scarcity. And that in and of itself is a big fucking deal. It's enormous. And we will look back on this in 20 years. Our kids will say, our grandkids will say, can you believe those fuckers allowed, a central bank to set the price of money?
I know.
What the hell, and that led to the collapse of the entire world financial system in 2028. I mean, what the fuck were they thinking? I mean,
right.
These people, they were stupid as shit. And so, just because you're old doesn't mean you can't learn. And just because you're old doesn't mean you shouldn't investigate. And so what you need to do for these older people, what you need to say is, look, we're not sure we're right, but, as Greg points out, if you take a 1% allocation of your net worth and put it into Bitcoin and you lose it, your life isn't going to change. If you take a 1% of your net worth and put it into Bitcoin and it goes up 200x, which I think it will, that's going to change your life. And so, why don't you consider taking a 1% weighting in this? Why don't you consider at least doing the work, which is something that even I think, some people say Ray Dalio understands it, and he's just shilling for the system. I don't think so. I met him once. I actually don't think he's as smart as everybody thinks he is. I know that's a very arrogant statement to make, but I don't know. I'm a judge of people, and my sense is he really doesn't understand what it is. And, you've got to understand what this thing is. And right. I would say, a lot of people listening who are in the boomer generation who are skeptical, the place you start, and I met him, 8-9 years ago, is with, the Bitcoin Standard by Saifedean. I mean, this book has changed the world. It will be one of the most important economic books of the last 50 years. And if you haven't read the Bitcoin Standard, don't talk to me about why Bitcoin sucks. In fact, I would think that would be something you guys could say to your boomer friends in the firehouse. Have you read the Bitcoin Standard? No. Okay. Then we don't have anything to discuss because you haven't done the work. You have to start off by doing the work. And once you do the work, you come to see that, holy shit, there's, as Greg and I debate this, there's either 400 trillion or 900 trillion of fiat crap in the world, right? And we debate it. Depends on whether you include bonds and derivatives. And there's only, 400 billion of Bitcoin and 5 trillion roughly of tradable gold and gold stocks. So, and by the way, all that 400 trillion, the large amount of fiat crap, I think most of the guys in the firehouse would certainly understand that the governments are out of control and mismanaged, especially because you guys are in Illinois.
Yeah.
I mean, is there anybody in there who thinks that the government of Illinois is doing a good job? It can't be, right? So once you come in, people ask me, say, how could Bitcoin fail? How could, or they look at investment fund, they say, Larry, how could, tell me how this could go wrong. It's a smart question, by the way. Whenever you're looking at any investment, you say, okay, how am I going to get fucked here? It was like from The Big Short, right? Tell me how I get fucked. Tell me how this goes wrong. I'll tell you how it goes wrong. This goes wrong. My sound money thesis, gold and Bitcoin, goes wrong if governments suddenly chop all expenses and balance their budgets and plan for the future in a really responsible way. If that happens, our stuff isn't going to work nearly as well as we think it's going to work. Now, and of course, when I say that, everybody laughs out loud because in the existing government structure, how would you rate the odds of that event happening? I put them at extremely low.
Very low.
They're not zero, but they're very low, right? So, monetary systems are programmed to debase, as Greg says. Bitcoin and gold are your protection.
Can I just jump in there, Larry? In fact, unless they forgave the accumulated debt in the world already, which would mean pension plans that own all of this debt have to write it down to zero, and therefore pensioners' pensions have been compromised. Even if the government's balanced the budget for the rest of time, it's still over, Larry. It's still over. You see the funny.
Right, it is over, but I'm just
so
give the
so there's
counter.
no, but I'm picking. But I am actually just splitting hairs. I'm overthinking stuff. For the listeners, why do Larry and I disagree on the total financial assets in the world? Because I'm a debt guy, and debt runs the world, people. And there's 400 trillion of global debt, and then there's the 400 trillion of stuff Larry talks about But you can't forget about the most important elephant in the room, because debt has prior claim on everything. Debt is your first prior claim. So you can be an equity guy and forget about debt. No disrespect to you, Lar, but you got to look at enterprise value, my friend. And enterprise value always includes debt, whether you're looking at a company or a country. So that's why there's $900 trillion of total addressable market for Bitcoin. But either way, Bitcoin is such a fraction of that. It doesn't matter whether you're using 400 trillion or 900 trillion.
And just
it's going to go
because somebody
higher.
asked this, they said, what are the risks to Bitcoin? How could Bitcoin fail? In my opinion, and because I think this adds credibility when boomers look at what's wrong with Bitcoin, okay? What's wrong with Bitcoin? If Bitcoin blew up technologically, okay, that would be a big issue, all right? And when I first got into it in 2013 or 14, that was my great concern. How can you really have money based on computers? I mean, computers do blue screens, they crash all the time, et cetera, et cetera. But once you get deep into it and you understand how it's set up and how it's working, the whole hash process, and then once you consider the fact that we're at over 777,000 blocks and that it's been running flawlessly for, coming up on 15 years now, you suddenly start to realize, okay, the odds of it technologically failing, they're pretty slim. And then other people say, well, there'll be another one. Well, no, there won't, because the network effect, it's so deeply ingrained that it's going to be hard. There's a first mover advantage that's impossible to catch up with. The other risks would be, the only other risks that I can conceive of are, that people lose interest in it and the use cases start to go down or disappear. But as we all know, the use cases are going up. You look at Nigeria, you look at Lightning Network, you look at everything that's going on. Use cases are growing enormously. So I'm not worried about that. Here's one, though, that could slow it down, right? And this has happened recently because, as you saw, Washington, D.C. ended up with egg all over their face when FTX blew up. I mean, FTX was selling unregistered securities, right? I mean, they didn't meet the Howey test. And the bottom line is that Gary Gensler completely and utterly failed at his job of protecting the American investor by letting all of these companies go bankrupt. And, there were plenty of smart people calling him out, Corey Clipston and a number of others, calling out all these frauds, and they just let them run rampant, and then they blew up. And as a result of that, they're now trying to close the barn door, now that the horse is out of the barn door, and they're talking about, they've gone after Caitlin Long at Custodia, which is just despicable. And they've tried to close the barn door on all the on-ramps and off-ramps. And I could conceive of a situation where they also maybe decide that, Bitcoin and gold guys, they're ruining this beautiful fiat money system that we have, and therefore we're going to tax this stuff at 80 or 90%. And so we're going to shut down the on-ramps and we're going to tax the living shit out of you people. And my view is, okay, fine. Good luck with that, because one, you don't know that I have it, and two, taxes are only due when sold, and three, I ain't selling. And so, all I got to do is wait until that generation of politicians expire. And I really bought this Bitcoin. The Bitcoin I have, I really bought it for my kids. I didn't buy it for myself. I don't really need more money, but I want my kids and I want my grandkids to not be destitute. And so all we got to do is outweigh them, right?
Let's circle back for a second to talk about Dalio, and maybe dare we even talk about Charlie Munger for a second. The interesting thing about Charlie Munger, I think a lot of what he has to say is interesting, really good stuff. I've got his Poor Charlie's Almanac, which I was paging through before we started this. And one of the things that he's really prolific about talking about is his circle of competence. Him and Warren Buffett are very adamant that they are very, they have a very narrow expertise, and that expertise is something they know they have. So they narrow in on what that is. They capitalize on it, which is the smart thing to do. And I think a lot of people listening to this who maybe don't know shit about Bitcoin would think themselves, I'm just going to buy some, very generic funds that are going to give me exposure to a lot of shit. Bitcoin doesn't really matter. Even if it does get huge, like, this is going to be safe. Why do I even want to put 1 or 2% of my money to risk on something like that? Because I am not competent in any of this, and I want to play safe, right? So that's one way of looking at this. And then the other thing is like the Upton Sinclair quote, which we've probably beat on more on this show than anything else, which is, I'm just going to kind of slaughter here, but it's basically, you can't teach a man something that his paycheck is telling him not to know. And that's exactly what Dalio and Munger are fighting, which is they are getting paid extremely well to do what they do, and it doesn't pay for them to give a shit about Bitcoin. Dan and myself, Josh, talk a lot on this show about running a Bitcoin node. If you are a serious Bitcoiner and you want to verify, not trust, you will take this step at some point. For our node setups, we run software and hardware from Start9 Labs. This setup enables us to run a reliable and secure Bitcoin node, but then, if we so choose, experiment and graduate way beyond that towards many different areas of sovereign computing. You can download Embassy OS for free and install it on your own hardware, or you can buy one of Start9's plug-and-play devices. We highly recommend these devices. Start9 builds reliable and extremely easy-to-use products backed up with incredible customer support. Run a Bitcoin node, run a Lightning node, run a Nostr relay. Take control of your photos, messages, passwords, pictures, and data, all on one device. Embassy OS operating system is the distribution platform open source software has been waiting for. Visit start9.com. We only recommend and endorse companies that we believe in, and Swan Bitcoin is a company we believe in. I have been personally using Swan to DCA into Bitcoin since May of 2020, when Bitcoin was the wee price of $9,500. Swan's interface and on-ramp is incredibly simple and user-friendly. With Swan, you can dollar cost average daily, weekly, or monthly, or conduct a smash instant buy whenever you want. Withdrawals to cold storage are completely free and can be totally automated, truly set and forget. Swan wants you to hold your Bitcoin keys, and support is one click or phone call away if you need help during this process. Buying Bitcoin is just the tip of the iceberg. Swan also has a Bitcoin IRA product, business and nonprofit offerings, resources for financial advisors, private services for high net worth clients, and phenomenal educational materials. Visit swan.com for more information. And at swan.com/fire, you can learn about and receive Swan Premium for 1 year.
It's even worse than that. It
disseminate it.
It literally threatens their existence, and they know it. I mean, they're not
exactly.
They're both very smart men. Okay, I mean, I recently in a tweet said he's stupid because he is with respect to Bitcoin. I mean, he's not a stupid man. I mean, he's made billions of dollars, but he's done it in my opinion, an unethical way by gaming a fiat system. They both have, and I mean, Munger's. I mean, Dalio is. I mean, I have some respect for Dalio. I have no respect for Munger. I actually think Munger is a legitimately evil guy. I mean, the
way he fawns over the CCP is something that really blows my mind. I mean, whatever, you want to talk shit about Bitcoin, that's fine, but when you're fawning over a totalitarian state that will literally just disappear people for months on end, like, fuck you, man.
There's a spectrum. I mean, when you look at people's politics, there's a spectrum from hardcore statism, fascism on one end, and radical libertarianism on the other end, and Munger is way over on the statism side, right? And he admires China because they have the power to do. I mean, he's one of those people who thinks that certain people are better than others, and therefore they ought to have a larger say in how the world is run. I mean, this is the WEF. I mean, he would fit right in at the WEF. All these people actually think they're in a position to say how the world should be run and that we should all listen to them. And, my view on that is, fuck you. I'm not listening to you. You don't know how the world should be run. Free individuals are what created this world. And the founding documents of the United States are the most beautiful set of governmental documents ever created. And sadly, we've drifted away from them. And if we go back to the initial the founding principles of the U.S., we would be in great shape. But they've been corrupted by a corrupt system, and sadly, as some of the founders predicted, there are people who figured out how to play the game, right? I mean, this game's been going on for a long time. I mean, Andrew Jackson knew about it in the 1800s. I mean, there are people who believe that the state should control things. I mean, Mike Green is another one, another asshole that I can't stand, and then there are people who believe that we all should be free individuals and we should all make our own choices. I mean, my view is the role of government should be to be basically a fair referee and nothing more. Enforce the laws, run the courts. That's it. But Munger doesn't see it that way, and Dalio is a more complicated case. I mean, Dalio is a gold bug. I mean, Dalio sees the monetary debasement. Munger does too. Oh, yeah. He just doesn't admit it. He likes it because it benefits him. So.
Yeah.
Josh, I think your point was good, though. Like, people generally, a good heuristic, a good shortcut is don't get cliffed out. Don't get out over your skis, right, Foss? Like, that's a good way of looking at the world. Don't enter spheres and take risks and stick your neck in areas where your head could get chopped off. The problem is, as we move into this landscape of the mid-late 2020s and beyond, conventional wisdom it really tends to fail when paradigms shift. And the plates are shifting to such an extent, and the continents are moving in such dramatic locations people aren't expecting, at least people that aren't, that don't speak this language and aren't looking at the math, Greg, that this is a little different. I know that's like a risky thing to say, but I think two comments I would have is, A, consider the fact that this could be different. Flip over the stone, flip over the Bitcoin stone. And then secondly, if you do lack confidence in it, take a small enough position, as the two of you have said to start, where if we are all clowns here on the show, you're totally fine and protected.
That's right. I mean, Dan, and the point is a very good one. And I think one of the things I think a lot of people are having a hard time dealing with is that nobody has ever seen an investment climate like this, because nobody who is alive ever had an investment. What's going on at a macro level is we've got a bursting sovereign debt bubble. And the last time this happened was in the early 1900s. You had inflations and hyperinflations and depressions from kind of 1900 to 1940 or 35, in all of the major Western countries. And the investing climate since then has been relatively stable. And yet, I would submit that if you take a look at, the Fed's balance sheet as a good example, or the growth of the M2 is another good example, this is not stable. These lines are going parabolic. And the reason for that is that we are in a different climate. We are no longer in the deflationary post-World War II, fiat-controlled climate. We are moving into something different. And, the young people who are able to identify that and get in front of it are going to benefit enormously. And older people will too. So you've got to have your eyes open. But I get it. It's not conventional, but that doesn't mean it's wrong.
So can I jump in and just talk about, let's talk about Ray Dalio and what he exploited, because the system offered that to him. Mr. Dalio created a ingenious investment portfolio called risk parity. Okay. And basically risk parity involved two major asset classes, equities and bonds. But it also started with bonds that I mentioned earlier in the show, 40 years ago, had close to a 20% yield. And the risk parity portfolio that Mr. Dalio constructed was, he had equities, and then he had a leveraged position in bonds, which neutralized any volatility, because when equities sold off, people tended to run to bonds as the safety trade. Well, if you're levered long bonds and you have equities, and equities fall, but you have a heavier position in bonds due to leverage, and they go up in price because of demand, i.e. interest rates went lower, the volatility of your portfolio was neutralized and your performance was exceptional. Now, the key is to remember that Mr. Dalio started when interest rates were close to 20%, and they went all the way down to under 1%. Well, there's the memers out in the Bitcoin world. I guess I was on stage in Bitcoin Miami 2 years ago, and they put together a nice little thing. Imagine right under here, and I have my hands like this on my chest, and I say, it's fucking over, Ray, because risk parity does not work when interest rates are at 1%. Unless interest rates were to go to negative 5%, which is asinine. Only Europeans buy negative yielding debt because they're so stupid, okay? But it didn't go to negative yielding debt in North America. The point is, Mr. Dalio's risk parity model stopped working, and he got blown out of the friggin' water. Okay, so he had to change that risk parity model. You can actually put more than a couple of assets into a risk parity model. And I think Ray understands that gold and Bitcoin belong in a risk parity model. The problem with Bitcoin is it's too small for the world's largest hedge fund. The market value of Bitcoin means that if he was to go in and out like an elephant, he would squash everybody. It would be like a gorilla eating a banana. And all of a sudden, every monkey in the world is getting squished out because there's a gorilla in the room. So he doesn't want Bitcoin to succeed because he can't employ it in his risk parity strategy. That being said, I think Ray Dalio, when he tried to describe, he said, Bitcoin's not the answer. Then he got on TV and tried to describe the answer. And that dumbass was describing Bitcoin. Like, he's so myopic. So he might be a great risk manager, and he took advantage of a system. He knows what the answer is. It's right in front of his face. Ray, it's called Bitcoin. So I can take him on that argument from a risk parity stage anytime he wants. I have an open invitation to discuss risk parity with Bitcoin in the portfolio. But let me just add something, and this is what we're all missing. Age takes care of this, okay? There won't be a Ray Dalio in a couple of decades, and there certainly won't be a Charlie Munger in probably half a decade. And I'm just throwing out statistical numbers here. I don't wish not early retirement, death on any of them, but time takes care of a lot of this stuff. And as the new risk managers come up through the system and understand the technological advantages and everything, that takes care of itself. Can I add one more thing? Joe Kernan, beautiful guy on CNBC that has enough seniority, because he's been on CNBC since I've been watching CNBC for 30 years. And I think Joe Kernan might have been on for the entire 30 years that I've been watching CNBC. He basically called out Charlie Munger as a crotchety old 99-year-old on CNBC. You got to see the clip. And it was beautiful. And I applaud Joe Kernan for having the guts to call out a crotchety old 99-year-old on a technology, because Joe Kernan said, do you think Charlie's even read the first few pages of the Bitcoin standard, let alone the Bitcoin white paper? God bless you, Joe Kernan, for calling out a crotchety old 99-year-old who probably wanted, when he was born, not a new motor car. He wanted a faster fucking horse, because all he knew was horses. He didn't even understand the impact of an automobile. Okay? So go fuck yourself, Charlie Munger. You're giving advice very poorly. And at the end of the day, I'll summarize it with this. And I've said this before, so don't buy green bananas, Charlie. And that's a good thing. Why shouldn't Charlie Munger buy green bananas? Because most likely he won't be around to see them ripen someday, okay? And that will take care of itself. I do not wish this on anybody, but when he gives the most awful investment advice possible, then you have to call him out. And Joe Kernan did that for me and for my kids. So thank you, Joe Kernan. Charlie Munger, there's still time. I doubt you will ever change your thesis. Well, I guess age will take care of that. God bless you, sir.
The things Greg said is very important. He talked about risk parity and how these guys have played the risk parity game. One of the things that's absolutely critical to making this risk parity game work is bailouts. And a central bank is willing to print behind. Because, you know, Ken Griffin is a very wealthy guy. He's played the risk parity game too. He has a $250 million penthouse in Manhattan. And, you know, he also has Ben Bernanke on his board of advisors. The rumor on Wall Street is that Bernanke gets paid $20 million a year. Why does Bernanke get paid $20 million a year to be an advisor to Ken Griffin? He gets paid that money because when March of 2020 happened and the risk parity trade was going tits up because everything was absolutely going bananas in the markets, he had a direct line to the Federal Reserve and he could get a swap line. And if he had not been able to get that swap line, boom, he would have been BK. In the same way that Goldman Sachs should have been BK in 2008 when they were upside down on all those AIG and all the AIG CDSs that had been sold that were not backed. I mean, what these older people have to understand is how the system has scammed them. Okay, it has scammed them. These insiders on Wall Street have set it up to make sure that it's heads they win, tails we all lose. I mean, the 2008 crime was an enormous, enormous crime. I mean, we are all paying for their being bailed out. I mean, they had a system set up where they could lever themselves 100 or 1,000 to 1 and make enormous amounts of money. I mean, guys making $50, 100, $200 million a year as a result of the leverage they used in that system, which was extremely risky, which when it failed and the housing market collapsed, should have, I mean, Blankfein, all these guys, they all should have been BK. Blankfein should have been BK. Paulson should have been BK. Goldman Sachs, I mean, they should have brought in guys from the Midwestern savings and loan companies to run the major banks in New York, but they didn't, okay? Because these guys had the political power to get the bailouts that allowed them to go on and then to do it again. And Dalio has had those swap lines, and Ken Griffin has had those swap lines, and they've all had those. And that's why, I mean, the thing that I think people in the country are very, unaware of, and they should be more aware of, is everyone wonders why we have all these amazing technological innovations. Look at how technology has improved in Greg's and my life. And as a result of that, one would think we'd all be working 35-hour weeks and have greater and better lifestyles than we ever, should have had, right? How come? And yet my parents in the 70s in Ann Arbor, Michigan, lived a better lifestyle on a middle-class income than people who are working twice as hard get today. And the reason for that is because of fiat and the way that fiat has basically drained all the rewards and put them in the top of the system and left nothing for the average working person.
Yeah.
And it's criminal. It's a broken system. And so, at a first principles level, if these boomers, not only just to protect themselves, but also look beyond protecting yourself, just say to yourself, okay, the system's broken. How do I fix it? Well, we gotta crash the system. And to crash the system, we gotta have fiat fail. And fiat's in the process of failing. But if you want to silently protest fiat, there are two ways you do it. You get out of the fiat game. You buy gold or you buy Bitcoin. You don't let them have your money. And you vote with your feet. And as more and more of us vote with our feet, we've got them outnumbered. I mean, sure, these people at the top of the system, they control everything, but they don't control what the average person does with their own money. And they want to. They're going to try and give you a CBDC. You're not going to use it. You're going to tell them to go screw themselves, right? But in turn, if you take your piece of your savings and you put them in Bitcoin, that is a protest in and of itself. And I think, sadly, not enough people understand that's what they're doing when they're investing in Bitcoin.
One observation I have, Larry, you talked about fiat failure, and we've thrown out the word inflation some. The fact of the matter is, if you're on the wrong side, if you're positioned improperly to spectate this fiat failure, like, you're fucked. And I guess that parlays well into inflation. Like, the word inflation in public discourse is used so much, it's so poorly defined that it's almost started to feel like nothing. But if you really distill it down and you think about its impact even the last few years, like, it is an insidious bitch. And I would say this to members of your generation, because there's a lot of your peers that have done well and reaped the benefits, but we also need to acknowledge that there's a ton of boomers that got over levered, that are currently extremely strapped for cash and are just trying to get by. And my comment to those folks is, we're starting to get tangible examples of the impact of this buffoonery at the central bank government level, because it's not that it might fuck you over, it's that it's already fucked you over. And it makes me think of Lynn's recent piece, her February piece. She really honed in on the fact that inflation may be transitory at times in rate of change terms, but in absolute terms, it's not. Like, prices are not going to come back down to where they were. Prices are going to settle they're going to settle at structurally higher levels. Right. And yes, prices have been going up for decades, but not at the clip we've seen over the last few years. And when you do the math on the magnitude of the fiscal spiral, of the predicament that confronts sovereign nation states and central banks and the financial system, my base case is that clip is going to accelerate at a very uncomfortable level for people that are reliant on a certain number, right? As we said off the top, they ended their working years with a certain number in mind or a plan in mind. And this thing is ticking off at a clip that's going to fuck that plan up if they don't take action.
Absolutely. I mean, as you say, rates, things are never going back down. I mean, some people, a lot of younger people don't, have the historical. I mean, when I was a kid, gasoline was 29 cents a gallon, right? We're not going back there, guys. I mean, it's, we're pushing it 4 and 5, and someday we'll be pushing it 10 or 15. I mean, it isn't. It's not just inflation. I call it monetary debasement, really, and it flows through and how you measure it and everything. It's, it's pretty straightforward. And it's because of the government structure that we've got. Politicians use money to buy votes, and as a result of that, you can count on too much money being used, and you can count on, therefore, the saver is screwed. If you're saving in just general fiat terms. And I think we're in one of those periods where sound money assets are about to do extremely well. I mean, let's not forget, you can say whatever you want about Bitcoin. Bitcoin has been the best performing financial asset in the history of the world ever. Ever. At $16,000. I mean, Bitcoin went from pennies to 16 to 23,000, wherever it is today, 24,000 a coin. There is no, in that time frame, there is no financial, and actually in any time frame, there is no financial asset that has ever exceeded that performance. And I can't see why, you know, in the venture business, I used to always say, are the dogs eating the food? I mean, a trend in motion will continue. I can't see why that trend isn't going to continue. I mean, I think it will continue to be, I think the price of everything is going to go down in Bitcoin terms from now until forever, because there are 21 million of these coins and there are 8 billion people.
Yeah.
You know, and it's a superior form of money.
Larry,
right?
Larry laid it out. Go ahead, guys. I'll quickly say, focus on what Larry said. Monetary debasement, the difference between monetary debasement, how they measure inflation, which is a bit of a gaslighting in itself.
Constantly
and then
changing.
Remember, it's only mathematics. Mathematics and inflation compounds. So you're going to claim victory that you brought inflation down from 8% back down to, let's say they do magically get it down to their target, which could be 2%, or maybe they change their target. Doesn't matter. If you've had multiple years of 8% inflation, that compounds to the point where a 2% inflation is building on a couple of years of 8% inflation, and all of a sudden you're from 4 years ago, you're meaningfully higher in price, even though inflation year over year has come back down to 2%. So can I give a shout out? You mentioned Lynn Alden, and the chart that Lynn Alden posted that blew me away is in her very, sarcastic way. Can you believe the Fed posted this, where they assume that the U.S. Treasury will be able to run a deficit of 400% of U.S. GDP, and they're going to accept it? Because that's the math. That's how it has to run. And then if you look at the Congressional Budget Office, which you guys did a great tweet where you tweeted it out, that the Congressional Budget Office is actually running deficits of 15%
They already
annually.
admit it. They admit
on a
it's fucked
primary
already.
basis.
It's crazy.
Okay, so it's done. It's, guys, that's, and yet they're throwing it out there, and they expect the stupid people, which largely they do, accept it because they don't understand the math. But you mentioned a word called inflation. One of the words that I view that is making such a impact in people's lives is the word fiat. And I will tell you, I graduated with 2 years of MBA from Cornell University, and I never once heard the word fiat in 2 years of business school, okay? It was never an issue until now, because the fiat Ponzi is broken because of pure grade 11 math. We had a chance to solve this Ponzi, but successive financial crises, Latin America to long-term capital management, bailout, like Larry said, to great financial crisis, bailout, continually kicking the can up one level to government. There's no further place to kick it. So I love Lynn Alden. I think I might love Luke Gromen more. Okay, now I am a staunch, you can do whatever you want, but I would prefer to love ladies more than loving men. But Luke Gromen, I love you, because Luke Gromen is calling Bitcoin credit default protection for the people, because there will be countries that go bankrupt, and it won't be the United States initially, but in nations where they continually go bankrupt, they are serial defaulters, serial with an S, like Argentina. You need protection against that default. And guess what it's called? It's called Bitcoin. And you don't have to go to AIG to get your credit default swap or CDS protection like Goldman Sachs did. You can buy it in Bitcoin and not have any counterparty risk. So Larry pointed out that AIG was rescued. Why was AIG rescued? Because if AIG failed, so did Goldman Sachs, because Goldman Sachs had bought so much protection from AIG, and if that protection or insurance company went default, Goldman Sachs itself would have gone default. So hats off to my best buddy, Luke Gromen, who calls Bitcoin credit protection for the people. You don't have to be privileged. You don't have to have a huge bank account. You can buy it on the same terms that guys like Ivy League cucks like Larry Lepard and Greg Foss, who are part of the privileged people, we've figured this out, and this is the most beautiful form of insurance I've ever seen. If you buy fire insurance on your house, which you should also own insurance on the fiat Ponzi, and that is called Bitcoin. So if you want to go through life without fire insurance on your fucking house, you're probably a moron. But go ahead, because if you're going through life without insurance on your fiat, you're living the same stupidity as going through life with no fire insurance on your house.
We watched the house burn to the ground. It was literally a smoking hole in the ground, and the guy that owned it had it paid off, had no insurance. This was like a $1.5 million house, beautiful estate, gone. He was burning leaves in the front yard.
I'm sorry to hear that.
People do it.
Yeah, but probably part of the reason he might have done that is because he was so pinched in terms of his income that he couldn't afford the insurance, right?
Right.
Maybe. I don't know.
Yeah. Foss, what I heard out of you there with that Gromen rant was that you claim to be straight as an arrow, but if you'll bend for anyone, it might be Luke Gromen. Luke, you heard it here. Look out. Sleep on your.
Okay. I have to go. I'll take it.
Roman on the ski trip next year, huh?
There is a price for everything. There is a price for everything.
Stop
okay.
Right now,
I'm not going any farther. I am not going any further, except to say, listen to me. I'll take it to an exception, to an extreme. What would you do if your child had cancer and you could cure it? Tell me there's not a price that you would perhaps engage in some...
Larry, what I heard is
I don't know, man. Way to take a joke.
Yeah, Larry, next time you're on the road with Foss, you got to sleep on your back with your fist in your mouth,
buddy.
No this is
lock the door.
No, there's a price.
There's a price.
There's a price. Now that price...
You're going to get yourself in trouble.
I hear you loud and clear. You know, I think... Like, you got some people listening to this who don't understand the inner workings of the math problem. And this is what I love about you, Foss, and you, Larry, too, is you guys, this isn't opinions, dude. This is numbers down on paper. Like, when you start digesting the debt loads, the sovereign debt loads, the ongoing and increasing deficits that are all but guaranteed when you factor things in, interest rate expense that's just going to keep going north. We have a congressional budget office, as we just established, that's admitting, and I'm sure these numbers are as conservative as humanly possible, that we're going to be 200% debt over GDP by, say, 2050. There is a math problem, and if you don't understand what we're saying, I forget which one of you it was that said this on Swan Signal, but for someone that's just total ground zero, they're taking out a fourth credit card to pay off the first three, and they're going to take out a fifth to pay off the first four. And when you distill this down to the individual level, they're going bankrupt at some point, and the escape valve for bankruptcy at the sovereign nation state level is the fiat currency. Right. So it's like, this is where I just want to get on a mountaintop and scream at the people I care for.
Yeah.
There are not exits. This is a debasement straitjacket out of which there is no good exit, and you need to hedge this risk.
Right. And the problem with this, though, is that people haven't lived through this in the United States or Canada or any first world nation, since maybe Weimar Germany.
That's exactly right.
People lost everything then, but it's been 100 years.
That's exactly.
We are 3-4 generations removed from experiencing this. And even though the numbers might say logically this is deducible, it's like cognitive dissonance, like you just can't understand something you haven't experienced.
That's exactly right. I mean, and we're coasting on, the good credit of the United States post World War II when we had, all the guns, all the gold, all the productivity. And look, we've coasted a long way, and who knows? We could coast another few years. We could coast another 5 or 10 years. I kind of don't think we'll make it that far. But if you actually look at the mathematics of it all, and if you look at the third world countries that have had severe inflations, we're showing all the symptoms. They're all there. I mean, they're there as clear as can be. I mean, go look at a chart. I wish somebody could pull up a chart of the U.S. interest costs per year. I mean, the thing has gone basically vertical. Not many years ago, our U.S. interest costs were about $200 billion a year. Now they're running at a $700 billion rate and growing.
Right.
I mean, that's a debt doom loop. There's no way out of that. They need, and when you get to the point where you're printing money to pay your interest and your old debt. And when you get to the point where everyone realizes that that's what's going on, and some of us do realize that and believe that and know it, and the math proves it, but I would say, for the vast majority of the population does not realize it yet. But when they do come to realize it, they're going to say to themselves, get me out of this fiat. And so what you want to own is something that cannot be printed. I mean, look, houses will be good, cars will be good, farmland will be good. Anything that the government can't print will have value in the new currency that gets set up after the fiat collapse. I mean, I think Greg and I both believe that fiat will collapse. I believe it'll happen before 2030. Hard to tell within that next 8 years, but it's in that time window, I think it will happen. And you better own stuff because, $100 bill, might actually be worthless. It might be worth a few cents. That's what's happened in all prior hyperinflations. The most, Josh, you point out, the only real first world large hyperinflation that's happened in the last 100 years was Weimar Germany in 1921 to 23. We've had a lot of them in third world areas. I mean, Zimbabwe, Venezuela, Argentina's borderline third world, et cetera. And you can see it. All the patterns are repeating. I mean, this is not hard for anybody who has an education in monetary economics to see. So the slope of the curve is certainly debatable, right?
I'm curious to hear your both of your opinions on this. Dan and I have lived through one and a half bear markets now. We're not really sure where this thing's at the moment, but based on your experience, the two of you, what do you think's going on at the moment in Bitcoin? Is this like a bear market rally up to 25,000 or so before it peters out down to who knows where the bottom is before this thing's over with? Or you guys think that maybe this is different and this might actually recover before the halving? Or you think it's just doing the 4-year cycle all over again? Where are you guys at on your opinions on that? Obviously, we're not going to hold anyone to that. This is just predicting the future, which is entirely bullshit. But with some lens of experience the two of you have, what do you guys think?
I'll go first. I think that the odds are that the bottom was in at the 15, 16 level, but I would rate that as maybe a 60% chance and a 40% chance that we have one more big scare. I would revise that. I'd probably say it's 70 or 80% that the bottom is in. The retracement was not quite a Fibonacci 78%. It was close. A Fibonacci 78% would have taken you to 13, and we didn't quite get there. But and so I'm entirely prepared for one more dip down into the 13 range. If Bitcoin goes below 13, I'd be shocked. And I think more likely Bitcoin, and I've seen it in gold recently too. I think they're starting to smell the next level of debasement, and so I think I think there are high odds that the bottom is in, and that we'll be at much higher numbers not that far out. How do you see it, Greg?
One of the most exciting companies and projects that Josh and myself, Dan, have come across in the last few years is Crowd Health. If you're already familiar with Crowd Health and have interest in checking it out, then use code BLUE for a significant 3-month trial discount. Healthcare is an incredibly confusing, stressful, and cumbersome space to navigate. Crowd Health provides a remarkable and workable alternative to traditional healthcare setups for a fraction of typical premiums. It's essentially the decentralization of healthcare. You can leverage the power of Bitcoin alongside healthcare crowdfunding to put decisions about your health back in your hands. Each member gets access to great healthcare services as well as their own dedicated care advocate that will negotiate your bills and find members the best doctors and hospitals. Go to joincrowdhealth.com to learn more. And if you're interested in the Bitcoin-specific crowdfund, go to joincrowdhealth.com/Bitcoin. BCB listeners can enjoy healthcare freedom with code BLUE to get your first 3 months for a substantial discount at $99 a month. That is code BLUE. Crowd Health is not health insurance, which we feel is a wonderful thing. If you have healthcare needs or concerns, seriously, give Crowd Health a look. The Blue Collar Bitcoin podcast is brought to you by arguably the most legendary company in Bitcoin, CoinKite. They are the producers of the renowned Cold Card, the world's most trusted and secure Bitcoin signing device, built with a plethora of features fit for Bitcoin beginners all the way up to the most advanced of users. This device is a one-stop shop for your Bitcoin custody needs, and something the two of us have trusted for years. CoinKite also manufactures the Block Lock, a gorgeous e-ink digital display art piece sitting in the background of what seems to be every serious Bitcoiner on the planet. Block Clock can be programmed to scroll through key Bitcoin metrics, including price, hash rate, next halving date, and much more. Boy, oh boy, will this thing look good in your living room or office. They're also the makers of many other security and fun products for all users, no matter their technical aptitude. Support our show and get a delicious discount on CoinKite products by following our affiliate link on the screen and in the notes, and using code BCB for 5% off the cold card.
Well, I can't argue with that, but now one of the things that I'm almost, I have a adage, I will give you a Bitcoin price target, but I won't give you a time where it's going to attain that. But that tends to simplify my entire investing thesis. So I have a price target on Bitcoin of over $2 million US per Bitcoin in today's dollars. Let's be clear. Starting today, which means I would not be surprised if there was a gap to $2 million per Bitcoin. It isn't happening, but the point is, if that's my target in today's dollars, then I try not to sweat the small stuff, because even at $20,000 per Bitcoin in today's dollars, the market is telling me that there's only a 1% chance of me being correct on my $2 million per Bitcoin price target, right? 20,000 divided by 2 million is actually 1 in 100, or 1%. Now, I'm not 100% certain Bitcoin attains my price target, but I'm way higher than 1% confident. So therefore, I actually don't care, because if it's cheap at 20,000, it's twice as cheap at 10,000. But fuck, guys, that means it's gone down to a 0.5% chance that I'm right. And I'm just not that smart. I cannot split percentages within 10 percentage points, let alone within half of 1 percentage point. So I try not to overthink things. I just say to myself, how did I get to $2 million per Bitcoin? And I'll start with my famous $900 trillion of global financial assets, at which I think Bitcoin will ultimately attain a 5% market share. 5% of 900 trillion is 45 trillion. I know you boomers can do this math, so stick with me. 5% of 900 trillion is 45 trillion, divided by 21 million Bitcoin that will ever exist. There's your $2 million plus per Bitcoin in today's dollars, because global financial assets today are $900 trillion, but debt is growing, and as debt grows, other things grow, and that global pie gets bigger. So if you're going to tell me you're so smart, you're waiting to buy Bitcoin where you're 99.5% certain versus being 99% certain that it goes to your price target, dude, you're managing risk the wrong way, okay? This is stupid cheap at this price, and you have to own some. And if you're going to be fancy and trade your fire insurance on your house, and then the house burns down on the day that you had sold your fire insurance but planned to buy it back, you deserve to get that smoldering fucking hole in the ground, and you guys should turn your fire hose and put it down the guy's fucking mouth so he dies and doesn't reproduce and create stupid children like he is. So try and give the world a mathematics lesson, okay? This is what it's about. It's about playing probabilities, expected values, and managing risk. And very simply, I try not to overthink it. If my price target is $2 million per Bitcoin, and I'm worried about the next $10,000 move in Bitcoin, you're overthinking shit, people, and you're not that smart, because nobody can possibly be that smart. So don't trade your fire insurance. Bitcoin is fire insurance on fiat. And fiat is a piece of shit that is programmed to debase. And if you don't have insurance on that piece of shit, you shouldn't be managing your own money. You should give it to a professional risk manager to manage properly. So Bitcoin is an IQ test in risk management. And most people are failing that IQ test miserably. Do your homework. Thanks for listening.
2 million plus. I mean, the important thing is to look at what it is. I mean, it's a form of money. It's digitally sound money because it's immutable. that can be easily transferred in a digital age that is not programmed to debase. And that's an enormous innovation.
Mm-hmm.
Every other form of money in the sky, even gold. The supply of gold grows at under 2% a year, but in 50 years, we'll have twice as much gold on the planet. And there really aren't many industrial uses for gold. I mean, it's women's jewelry or it's bullion for money. And it's historically always been money, and I love it. And it'll continue to be money. And it's great. It's low volatility sound money. Bitcoin is high volatility sound money. But Bitcoin is superior to gold because we know how much of it there is. You know, there is the risk. I mean, one of the questions came up is how much risk is there of rehypothecating Bitcoin and paper Bitcoin? And that, you know, various people have various views on this. My view is that there is some risk, but that they haven't moved nearly. I mean, we all know the gold price is massively suppressed, and they haven't put the rails and the systems in place to suppress the price of Bitcoin yet, in my opinion. Now they may try to, and they may try to fight back, you know, as I said earlier, with taxes and blocking the on and off ramps. I mean, look, the people who run the fiat system are, in my view, evil people who have a very strong economic incentive to keep that system going. And they are going to throw sand in our face at every possible chance. And yet, you know, they're going to lose because people, you know, I mean, you can't stop an idea whose time has come. I mean, go over to Africa, look at some of the remittance use cases. You look at these places where their currencies are total trash. And you've got countries like, I believe it's Nigeria, where 20% of the people are using Bitcoin as their currency. You know, I mean, that's just, every year that spreads. And so this is the future version of sound money, sound digital money. And, you know, you buy Bitcoin at the price you deserve. So you can either decide you're going to buy some now, or you can wait and buy some later. You know, I mean, I think that our kids and grandkids will be shocked at people who are whole coiners. I mean, you know, $20,000 is a lot of money, but it's not outside the reach of a lot of people. There are a lot of people who can scrounge up $20,000, and $20,000, you know, 24 now, I guess, will get you a whole coin. And 10, 15, 20 years from now, you're a whole coiner. Oh my God, it's going to be an amazing, you know, it's going to be an amazing thing, right?
Yeah, I agree. And when this thing stays kind of broadside, as we would argue it is right now, this is what gets the two of us jazzed up so much, because this gives our demographic a chance, you know, to accumulate enough where it matters. Like, it will always matter to accumulate this. The way I see it going, it'll always be a good monetary technology for wealth preservation. But in terms of like totally changing the trajectory of your financial future, no guarantees, but this has a chance to do that at these price levels. Once we start coasting higher, there will be an extent to incite some maybe healthy FOMO in the listener. There will be a point maybe in the next 10 years where this thing kind of gets at an escape velocity where you can meaningfully use it as a savings technology, but it's kind of outside of your reach for building generational wealth on a level that you had no other opportunity.
I think that's right. I mean, I think we're still in the early enough days. I mean, look, I was paying $17,000 for Bitcoin in 2017. You know,
we were too.
Yeah. And here it is, only, you know, 5 years later, and 6 years later, and I'm paying 24 for it as a dollar cost average on a regular basis. But yeah, I mean, look, I mean, people need to go and look at, like, you know, some of these stocks, like. One of my great mistakes is I had Microsoft when I started off in the business, and I sold it to get the down payment to buy a condo because I wanted to live somewhere. But I got to tell you, that was a very expensive condominium, because if I'd held onto that Microsoft stock, you know,
Yep.
It would have been like a 2,800 bagger. I mean, and to me, Bitcoin has the same kind of, you know, thing, and it's even better than Microsoft, because in that case, I had to, know that Bill Gates and those guys in Baltimore, they were going to do the smart shit and grow it in the right way. The other thing I love about Bitcoin is there's no management team here. I mean,
right.
Imagine, you look at a company, you invest in equities, and, as Greg knows very well, I mean, people, companies can get effed up, right? People can
right. And the addressable market here is just damn near infinite.
Well, it's awfully large. Yeah, there are 8 billion people on the planet. And I don't know. I mean, we probably got 150 million of them owning Bitcoin, maybe a couple hundred million, I don't know, but it's it's a very, very big market. So to me, it's pretty simple, and I think what Greg says is absolute truth. That if you're not owning some of this, you're really overlooking. I mean, one of the things in investing I always try to say is you want to avoid regret, right? You want to avoid looking back. And so when I make investment decisions, I say, well, what could happen here, and what would I regret most? If somebody told you about Bitcoin, you understood Bitcoin, you took the time to read some of stuff about it, and you thought to yourself, I don't know if these guys are right or if they're wrong, but they might be right, and then you didn't do it, you didn't act on it, and then now it's 10 years later, it's 15 years later, and Bitcoin's worth $1 million, and you think to yourself, shit, I could have bought that for $20,000. That's going to cause some serious regret. I mean, the person who doesn't even know about it, nobody even told them about it. It's like, well, they wake up one day and Bitcoin's $1.5 million. Well, okay, whatever. Didn't get in on that one, too late. But if you hear about it and you take a little time to understand it, and you realize that it's in my opinion, much more than possible, it's highly likely. At Greg's point, it's not a 1% outcome. I mean, to me, it's like a 70 or 80% outcome. I mean, and to me, it's really just a matter of how fast is the curve. I mean, the curve could be slower than I think. I mean, it could take 20 years to get to $1 million. I don't think it will, but it could, but I'm pretty sure it's going there. And I know it'll be, 50, 100, 150 in a few years. And even if it only goes that far, that's on a $24,000 investment. That's not bad. I mean, you'd be hard pressed to find other things that are that attractive in today's world. So to me, it's, I would encourage people to forget the noise, forget the generational shit, forget FTX, and realize that through all the haze and the arm waving, and some people in the Bitcoin space don't help the space with all their, arm waving and, and stuff. And, do the work, just actually do the work, read the paper, read the white paper, read, the Bitcoin standard, talk to people who are in it, ask the questions, understand what the halving is. Understand what the difficulty adjustment is. Understand what the miners do. Just deeply understand what you've got here. And I'd be shocked if you don't, if people don't come to the conclusion that, oh, you know what? I need to have some of this because there's a pretty high probability it's going to work.
Yeah. If you aren't intrigued, at the very least,
right?
If you're hearing all of that, and you don't want to learn a little bit more, like you just aren't somebody who's going to make it in this world. I'm sorry to say it. Like if you just don't have the interest or the ability to learn,
you'll do
the autodidactic in at least a little bit.
No,
you're just not going to make it.
No, they'll make it, but I would say it a slightly different way, Josh. I think you will have missed out on one of the most obvious, great asymmetric investments in the history of investing.
Yeah. I wasn't meaning that like they're literally going to die, but I mean, I'm just saying like you're just not built for fucking endurance, or learning, or you just have. It's a sad state of affairs.
I mean, 5 or 6 years ago, nobody knew about it. Before Coinbase, it was hard to buy it. Before the fork wars, you were worried about the technology. Before the block size issue, you were worried about that. I mean, a lot of things have been hammered out of it, and yet we're still in the very, very early adoption days. I mean, we're at, maybe 10% penetration. And what that suggests to me is that, you're still quite early and, getting started makes sense.
We're in early stage penetration, Larry. We need full
Foss doesn't
penetration.
do 10%.
I'm not going there. Foss is great.
No, let's not go there.
Foss, go ahead.
Let's not go there. But. Yeah. So just to summarize, well said, Larry. Yeah, portability of Bitcoin is what makes it the most important attribute over other hard assets. So I'm not saying don't own other hard assets. What I am saying is be very careful owning bonds and fixed income in a debasing. So bonds are the largest asset in the world, or debt is the largest asset in globally. It's where you should take your allocation from and put it into. So if you have exposure to bonds, take a small percentage of your bond exposure and put it into Bitcoin. Okay. That's the first thing. The second thing is I don't have problem with people who don't do the research. If they're, let's say, heart surgeons and they're out doing what they do properly, which is open heart surgery on other people, then they have professional financial advisors who do their financial investing for them. Well, it's the financial advisors that I have a problem with that are intellectually lazy, not the heart surgeon that's out there saving lives and is working 100-hour weeks and may not have the ability to study Bitcoin for the hundreds and even thousands of hours that Larry and I have studied it for. But you'll listen to the professionals, okay? So here's my shout out to you guys, Josh and Dan and Blue Collar Bitcoin, and my good friend Seb Bunny and his platform called LookingGlassEducation.com, of which I'm a partner in as well. We're trying to educate the world, okay? And it's not because we think we're smarter than other people. It's just that we have practiced open heart surgery longer than you have. So you're supposed to listen to the professionals. You can either decide, no, I don't want to listen to that open heart surgeon. I'm going to do it myself, or I'll listen to the pro. So I'm not sure how much longer this show is going to run, but I'm going to tell you I want to make a very special shout out to a gentleman who gives me hope about the future of children. His name is Jason Lowry, and he works for the U.S. Space Force, and love him or hate him, because there's lots of people on Twitter and Bitcoin Twitter that hate him and think he's a spook. I think he might be one of the most valuable assets that the United States military has in its arsenal. And I'm not saying as a weapon, I'm saying as a brain that understands the beauty of Bitcoin to change the world for the most important country in the world. Now, don't forget, I'm a Canadian. I live rent-free in the attic of the United States. Most of you knuckleheads can't even find Canada on a map, okay? You think everybody north of Connecticut has no fucking brain. Okay, that's fine. I live in your attic. Go fuck yourselves, but do me a favor. I want the USA to succeed, okay? Why? Because USA is freedom. USA is the last bastion of freedom in this all godforsaken fucking world of everybody feeling entitled and get the government to pay for this and everything, and they'll control us. So God bless the USA. God bless Jason Lowry, who just published his thesis, a 400-page thesis. It's available from Amazon. I've seen excerpts from it, but I've also met the man personally twice, and I will tell you, thank God there's kids his age that are trying to change the world. He wrote a thesis published for MIT and is being presented to the Joint Chiefs of Staff and the Office of the President, Optus, or however you say that, POTUS, President of the United States. Because I want, as a Canadian, I want the USA to succeed. I am not Charlie Munger. Fuck you, Chinese Communist Party. I want USA to succeed. And how does USA succeed? USA is freedom. Bitcoin is freedom. The two should go hand in glove, okay? Or hand in hand. That's my rant from the attic of the USA. You can cut me off. You can send me out to pasture. I am not Charlie Munger. I am a law-abiding, God-loving, free citizen of North America, and I want the USA to succeed. Thank you, Jason Lowry. Thank you, Blue Collar Bitcoin. You guys are doing God's work for my kids.
I want to give a further shout out to Greg. Greg, out of his own pocket, has funded this LookingGlass.edu, and he's a guy who really cares about making the world a better place for the kids, and that's why I consider him to be a dear friend and have enormous respect for him and what he's done. And basically, anybody who is fighting hard to bring sound money in the form of Bitcoin, gold, etc., into the world is, in my view, working to make the world a better place. The world is extremely broken right now. I mean, we can all look around and see that. And given that the world is broken, my view is we're all called upon to stand up and try and fix it. And it's not about some red-blue fight. That's all just noise. This is the base layer. If we get the base layer right, if we get money right, if we get sound money right, a lot of the other problems in the world that we're having are going to disappear. And so to me, this is a more important fight than any other fight we're having right now.
Well said.
Yeah. I think we want to extend to both of you guys as well. Thank you for all that you two have done. You guys have been people that we look up to and listen to, and I think a lot of people in the space feel the same way. So thank you for all your contributions to this.
I echo that. And Jason Lowry, you've played hard to get for a while. We want you on this show.
You gotta come on.
We want you on this show. Shout out to Jason. Hey, we like people that play hard to get. It butters us up a little bit. We're excited, whatever, but it's time. Let's make this happen. In terms of Looking Glass, we love Seb Daz, the whole team. We've been doing a series with Seb and Daz every month, Bitcoin Basics series. We're 3 episodes into what's probably going to be an 8-part series. Go check that out. If you're anyone or you're a boomer that's listening and like, hey, these guys have said a lot of things. They've thrown out a lot of terminology. I'm a little confused. There's so many good touch points, but that's our best attempt to give you something to grab onto. I wish we could keep going. We're at time. You guys have been on before. We'll have you on again. You're both super gracious. Any last thoughts, shout-outs, comments before we wrap this up and go back to our families here?
Yeah, I would just say one thing. It's hard. We've been in a bear market for this stuff. We've been in a bear market for all sound assets for a little while. And I would just say, chin up. We are going to win. I like bear markets because they cause me to work out more. And so my fitness goes up when we're in a bear market. And, it's like, my view is just let's fucking go. We're going to win. And sound money is going to take over the world. And, we hope more and more people become a part of it. More and more people are becoming a part of it. And if there's anything we can do to help, let us know.
Yeah, well said, Larry. I can't say it any other way. Larry is too kind with his flattery for me. I feel the same way about him, though. But guys, Larry and I are not important here. What is important is the kids and the people who are coming into the scene and doing the hard work, the heavy lifting, the proof of work. And so, I'm 60. Larry's a couple of years older. I know for sure that if I was half as smart as Jason Lowry is at his age, I just wish that upon myself. So you have the luxury of listening to guys like yourselves that are way further ahead on the curve than I ever was at your age. You have a real chance of making a huge difference in this world, both financially, but also in terms of making the world a better place. So I have one goal, which is to leave the world a better place than the world to which I was born into. And so far, we're not doing that. But I believe Bitcoin to be that solution. And I want to do whatever I can to help people and educate people for that outcome. Because right now we're on the wrong path and there's not enough people calling out the fiat Ponzi. I don't want the USA to fail. I have to say it once again. I want freedom to prevail and I want to be part of that movement. And I love freedom. So Bitcoin for your kids is the solution that ensures the USA will remain the last bastion of true freedom in the world. And we've lost a little bit, but I want it to be a better place and we can take it there with free money. That's what Bitcoin is. Not manipulated money, free money. So thank you for having me. Send hate mail to @LarryLepard or whatever your Twitter handle is, Larry. Send all the hate mail to Larry. I get my share, but I've learned to try and filter out the noise. And I take the Jeff Booth, a good friend of both of Larry's, and my approach. Yeah, freedom of speech is very important. If people disagree with me, that's fine. Just at least do the homework, people. I implore you to do the homework. It's that important.
Jen,
Thanks,
and Greg,
guys.
it's not just for the kids. It's for the parents. Hashtag for the parents. That's what this episode is about. Gentlemen, beers in Miami. We got to make that happen. We look forward to being with you guys in person. It's going to be a blast.
Good to see you all. Take care.
Take care, guys.
Thank you. Thank you.